And as I mentioned before, we have been able to see UBS stemming client outflows. It's stabilized operations. It has been advancing the merger. But what guidance do we have for the profitability target here? I think that is the ultimate question. How soon before we see genuine stabilization in these numbers?
Yes, no, that's very true, Dan. I think these results are very much distorted by a number of non-recurring items. There's a lot of accounting noise in these numbers. So I think the market will not pay a lot of attention to the headline number. I think, for us, UBS has guided that, they're looking only towards 2027 before we really going to arrive at the situation where all of the accounting noise will be out of the results. But I think there are some other numbers that we can look at that gives us a good indication of the underlying health of the business. For me, the really key number is net new money growth in the wealth management division, and especially in the Credit Suisse portion of the wealth management business. And, the reason why net new money is really that important is because, assets under management obviously includes market movement. So it really gives you a good indication of whether the combined entity manages to hold on to clients and even possibly gain back some of the clients that Credit Suisse lost in its wealth management division due to concerns about the health of the Credit Suisse business. And, it's also important to take note that the Credit Suisse portion of the wealth management business has actually been close to break even, slightly in a loss-making position. So, it's really vital for that division that it gets some new assets under management to improve its fee income and return to profitability.
Yeah, indeed. And also just looking over some additional lines that are crossing here, I wanted to pull out that UBS has said Q4 net new assets in wealth management was 21.8 billion. So again, stemming the tide of losses there. It says the ambition is to surpass 5 trillion of invested assets in global wealth management by 2028. It adds that the combined merger of UBS and Credit Suisse is planned to be completed by the end of Q2. Which is interesting as well. And I've also just been provided some more information here on the numbers. It says with regards to the combined entities here, the merger expected to be completed by the end of the second quarter 24. That's in line with expectations. The merger of UBS Switzerland AG and Credit Suisse Schweiz AG entities is planned before the end of the third quarter of this year. It says that's a crucial step in enabling us to unlock the next phase of the cost, capital and funding synergies we expect to realize in 2025 and 26. Here's the other point to make here. On capital returns, it's now planning to reinstate share repurchases after the completion of the merger. It says up to $1 billion USD in 2024. It also says it's committed to progressive dividends and accruing for a mid-teen % increase in the dividend per share for 2024. It says the ambition for FY26 share repurchases will exceed FY22 levels. So UBS is going all out here. It's saying not only are we going to reinstate dividends here, but we're going to start buying back shares. Your reaction?
Yeah, that's a big move. As part of the uncertainty when UBS was, I guess one can almost say, forced to take over Credit Suisse, they did stall their existing share buyback process, which came as a disappointment to a lot of UBS shareholders. And I think, this also gives a clear signal to the market that UBS feels comfortable enough in its capital position and in the health of its balance sheet, and also the health of the acquired balance sheet from Credit Suisse to reinstate the share buyback program. So I think, the market will definitely look at this in a positive light. Speaking under correction, I think, previously the share buybacks that UBS had as a standalone entity was maybe slightly a bit higher than what they're guiding now. But, I think it's more about the sentiment that, look, we're happy with our capital base. We're happy with the health of our balance sheet. We're confident enough to start buying back shares again.
Yeah, absolutely. And UBS saying, look, we've got this. We can do this. And, Johann, I have to say, the UBS results are always so fun to react to because when they come through, it's just this deluge of data and information. And then I get sent one page on my mobile phone. So I'm doing my best to get the information out as it crosses. But before I let you go, just quickly, anything else that we should be looking out for when trading gets back underway? And also, we should flag for our viewers that we are going to be speaking to the CEO of UBS, Sergio Amotti, for more insights, more analysis on these numbers. But Johann, just a final word here. Anything else that we should be looking out for? Anything else that sticks out for you in these numbers today?
Yes, I think, probably some guidance around the expectation of what the impact of lower interest rates is going to be on UBS. I think 2024 could be slightly a more challenging year for UBS from a revenue perspective, from an existing business perspective. We've seen it across the board with banks reporting that there are pressure emerging on the top line due to the expectation of lower rates in the second half of this year. UBS arguably slightly less exposed, than your traditional retail banks. Fee income is by far the largest component of its revenue mix, but that's not to say that net interest income isn't important for UBS.